Hey guys, what's going on? I wanted to show a quick another video talking about the call debit spread that I just legged into. It's actually called a ghetto spread, and that's pretty much whenever you leg into a vertical spread. I just made one earlier talking about how I opened up this position, the bearish put debit spread, but I also just opened up another bullish spread as well. I wanted to show you guys this one because essentially I got into this trade risk free. So it cost me $1.39. I was watching the stock. It took a pretty decent dip. I tried to time it and buy at the bottom, and I luckily did for this trade. Obviously, you're not always going to be able to do this, but I bought it for $1.39, and then I waited for the run up, and it looks like it's going to continue to run here a little bit. But I waited for the run up and then sold this one for $1.40. So I actually locked in $1 profit, and then essentially I'm still in this trade with risk free, right? Because I've already got my money back. I bought this for $139 and I sold this one for 140. So I literally got paid out $1 to be in this position. And then essentially, the most that I can make is $25. And the most that I could lose is actually I can't lose anything because I'm up $1 on the spread. So this is a ghetto debit spread. If I wanted to just come open this, kind of like what I was talking about in my previous video, if I wanted to just buy it at the current market price, it's going to be $13. So, there's still going to be some risk on the table. But if you want to be a little bit riskier and try to time these options, I pretty much bought this call option, like I mentioned, at $1.39, right? I just bought a single option, cost me $1.39. I let it run up a little bit, and then once I was ready, I set a limit order to sell this guy at 1.4, so that essentially I had a risk-free trade. Um, Obviously it's not much. Once again, I'm testing this out with a small amount of capital, but it's a risk-free trade. I was risking $1 to make $25, so I will take that risk to reward all day long. So yeah, but like I mentioned, ghetto spreads are a little bit harder than regular debit spreads because you have to time it right. Because if not, it could go against you really quickly. But like I said, luckily in this situation, I timed it right and I got into a profitable position. So now I'm just playing with house money. I got paid $1, like I mentioned, to enter this position. So I'm just gonna let it ride until tomorrow, and hopefully I collect the full credit of $25. If not, I'm sure it'll still be profitable tomorrow. At some point, I can always cash out early. So, all right, guys, that's it for this video. I just wanted to show another example of this ghetto spread. Essentially, it's a call debit spread, but they like to call it a ghetto spread whenever you leg into the positions, like I mentioned in this video. But yeah, guys, that's it for this video. If you have any questions, feel free to leave them down below. And always do your own research before investing into the stock market. Disclaimer, disclaimer, disclaimer. But yeah, guys, that's it for this video. Thanks for watching.